Joining us now on Market Sense is Partha Desarkar, the global CEO of Hinduja Global Solutions. Remember, this is another counter that's come out with its quarterly performance, and the third quarter's turned out to be a subdued quarter. So, Mr. Sarkar, thanks for joining us here. My first question obviously has to be on that subdued performance. The stock is down 4%. I don't know if it's because of the entire market being down or you are being punished a lot more than that, actually. What would you attribute to that subdued performance? And can you tell us a bit about the kind of traction you saw in the more important verticals such as healthcare, insurance, and telecom?
Yeah, so you see, let me answer the first question. See, the reported numbers will be subdued because of the way rupee has strengthened. So if you look at our constant currency growth rate, that's a fairly decent number of 5.2%. And that boils down to only a 2% growth just because the rupee has strengthened so much between the two quarters, right? So that's the principal reason why the numbers may look subdued. And that's also gone down to the bottom line, right? If you look at it, bottom line steady, whereas we generally show an improved number in the second half of the year. So that's been the unexpected thing that has happened between the two quarters. But apart from that, I would say the core business has been doing very well. It's exchange rate is not something that we can effectively manage beyond taking forward covers. Our run rate for this quarter is about $150 million, which puts us to a $600 million run rate on an annualized basis, which is reasonably good considering the fact that we had closed last year at about $550 million. Healthcare vertical continues to be the biggest growth driver. Today, in this quarter, it has crossed 50% of our revenue. And we have continued to focus on healthcare being the vertical of choice for us.
Okay, so Mr. Sarkar, can you also give us an idea of what we can expect going forward? Talk to your shareholders, talk to the analyst community. For example, what are the client budgets looking like at the start of the year? What's your outlook on that front?
No major change along expected lines. I think the key changes that we're seeing is now more demand for digital, more demand for AI and automation. So that's where we are trying to build our capabilities also. We are also finding that, medical cost management is an important driver of cost for our clients. And that's where they are trying to bring more cost rationalization. So we are moving upstream into creating capabilities in the medical cost management field as well. So that's going to be our area of focus going forward, the medical cost management for our healthcare clients.
As well have dipped this quarter, and you see them ranging between 10 to 12%, 11% over the next 12 to 15 months. What exactly is your trajectory?
So today, two of our businesses are losing money. Our UK business is losing money, and the small platform business that we have is losing money. If you are able to stop the bleed into these two businesses, the margins will improve beyond that. So I think the numbers, hopefully the numbers next year will be slightly better than the numbers at which we are reporting today, this year. But that again may get dampened by where the rupee ends at, because we really can't predict where the rupee will move.
Now, your 9-month consolidated revenue has also grown, and your profits have come in higher by about 5.3%. What exactly can we expect for FY19?
Our aim has always been, and our track record historically has been, in the 10 to 11% growth rate on constant currency.
All right, we'll let you go on that note. Thanks very much for joining in, giving us a heads up as to what to expect.